Gamarjavat everybody. Almost from last night, I'm trying to record this video, but unfortunately, either my computer at home or softwares did wrong. Now I will able to do it at my office at university. This question about the plan asset. So the first thing that we do here, the company purchase machines A and B, and what's the cost of the machine, and which cost should be included in the asset part of asset as an asset or capitalized, which cost should be expenses. Then later on we will calculate the depreciation expenses at the end of the year. So first question is prepare the following machines. Journal entry record it is purchased on January 1, 2022. Of course, for the fine reason, as a matter of find the questions, I mean, we assume the asset is purchased in January 1. As you know, the assets like this machine can be purchased at any time throughout the year. So you need to do a little bit more calculations if it is purchased in the middle of the year. Alright, now let's see what is the machine purchase. The journal entry to record annual depreciation December 31 after purchase, and company use it for 1 year. What will be the depreciation or part of the cost or expense part of the asset that's purchased in the on January 1, 2022. So you need to calculate the cost of it, expense part of this machine December 31, 2020. So the cash price of the machine was $35,000. So if you look at that one, A1, right? This is the A1. The price of the machine. So we say that this is the purchase price, which is 35,000. Related expenditures included sales tax 2020, shipping costs 150. So these are all included. Sales tax that you pay for 2020, $200, and the shipping is shipping cost is also included, because this is all the expenses intended in expenditures for intention of using this for manufacturing. Insurance during shipping. So this is about shipping for insurance. Shipping insurance, that's maybe installation and the testing cost. This is also included. Installation and the testing is also part of the cost of the asset, should be included. $70. $100 of oil and lubricants to be used with machinery during the first year of the depreciation. So for example, this is not, because this is will be recorded as expense or revenue expense in the year used. We say during it is first year operations. The panel estimates that useful life of the machine is 5 years, with 5,000 residual value remaining at the end of the that time, 5 years. Assume that step line method of depreciation is used. So what is the cost of this? Yeah, so this is the total cost of machine will be, machine A will be $37,500. Simply saying. So we will record this as asset, and what you need to do here, the equipment, or you can say like machine, doesn't matter, is 37,500. Asset will be increased. Let's say the company paid cash and purchased it, $37,500. All right, this is one. And now second is journal entry record journal entry record annual depreciation at December 31. So recorded cost, that will be recorded cost or asset is $37,500, and we find less, let's say, residual value, which is to find 5,000 is deducted. So we find what, which is $32,500. This is depreciable cost of machine A. All right. So we need to depreciate $32,500 throughout the 5 years. So if you divide it by 5 years, right, and you find depreciation expense $6,500 annually. So this is the depreciation expense. So we can say annual depreciation expense. Let's say if you want to do monthly, so you can find it divided by 12. So you'll find monthly depreciation expense. What you need to do here, depreciation expense $6,500 and accumulated depreciation will be $6,500. We do this when? Of course, we do this on December 31, 2020. Alright, so this is how we do in the B. In the B, it says that calculate the amount of depreciation expense that Pele should record for machine B each year of its useful life under the following assumptions. Let's say Pele, the accounting person, you work in this company, use the straight line method again, straight line depreciation. So what's the machine B? Recorded cost of the machine is 80,000. Pele estimates that useful life is 4 years and the residual value is 5,000. Alright, similar manner, similar way that we will do for that. I mean the cost of machine B is $80,000, including maybe all other like these items, right? This. But in this B, it's given sum up, right? We know already less residual value, right? Which is also 5,000. So then we find depreciable cost of asset. So is $75,000, and it says that it will be 4 years. So 4 years. So then again you find annual depreciation expense for this asset. It will be how much? $18,750. Okay. This is the B1 and B2. Pele use decline balance method. Rate use is twice line method, as you know. So if the in the 2, if it is, this is 1 and this is 2. In this case, what we need to do here, find the year here. We have year here, book value at the beginning of the year, double depreciation rate that we need to. This is we will find annual depreciation, right? Annual depreciation and accumulated depreciation. So let's find this one. So year is, we have 4 years, 2020, 2021, 2022 and 2023. So that is 80,000. Oh, I don't know what happened. Okay. This is 2021, 21, 22, and 23. So we have original cost $80,000, and the rate is what? 4 years. If you divide 100 over, 1 over 4, right? 1 over 4, just like that. 1 over 4 multiply 2. That means that 1 over 25%. It means 50% of assets will be depreciated every year. Remaining book value or remaining value of the asset will be depreciated. So in this case, first year it will be half of the asset already depreciated, which is depreciated. So book value, accumulated depreciation, and the book value. If you put it here, book value, it is the $40,000. So at the beginning of the second year, after the asset is purchased, book value undepreciated amount of the asset is, or book value of the asset is $40,000. Again, you will use the same, right? 50%. So remaining 50%, but this is what 20. Then accumulated depreciation will be 60,000, and that will be $20,000. And then here $20,000, the same rate. So 50%. So in this case, it will be $10,000. So it is $70,000, and the book value, the remaining book value, will be $10,000. Now, now we have $10,000, right? So if you multiply this by 2 by 50%, so 50% of this 5,000. So 5,000, and we have $75,000, and remaining is 5,000. As you see here, this is remaining book value, the residual value, which is already given. So sometimes in the end of the year, economic life or useful life of the asset, this annual depreciation might be is plug-in number. In this case, it comes exactly the same. So you will plug here a number such that these differences will give a residual value, which is 5,000. As it is here, it is 5,000. But this time it comes exactly the same. Alright, let's look at the other question 2. Pele used the units of activity method and estimate that the useful life of the machine is 125,000 units. Actual usage is as follows. So you get this information. This is the first year, second year, right? And now, I mean that we already end of the useful life of this asset. So in this case, we need to find the rate first, right? Rate. First, we need to find the rate for this so rate, and this is 3, and depreciation cost per unit. Right, we need to find per unit. So what's the $80,000 we have minus 5,000 residual, right? And how many units? 125,000 units. So in this case, you will find 0.6 cent, 60 cent per unit. Depreciation costs this. So if you find the annual depreciations under the unit of production method, so 21, 22, and 23. So 0.6 multiply how much it is? The first year 42,000 units is produced. In this case, it will be $25,200. And 0.6, and the second year 37,000 units, which is given in the question, $22,200. These are actual numbers, not estimated numbers. All right. 6 cents multiply 28,000 units, so that will be 16,800 units. Sorry, dollars. These are dollars. Dollar, and 0.6. I'm sorry about this. Something wrong with my software. And $10,800. So when you compare the depreciation, if I get this, copy this, you see, and let's say this is so this is also depreciation expense for each year. This is unit of production method. Yes, unit of production method. This is double decline balance method, and we have, you see, different results, right? Different results. In the sorry, this is I think I get the I need to get this one, not that one. Sorry. Okay, so you see differences. Under the double decline bonus method, the company reports highest amount of depreciation expense first year, but while the straight line methods, as we did here, straight line methods, it is fixed. It is like 6,500 fixed, which is method lowest one. In the first year, the straight line method report the highest amount of depreciation expense, whilst the double decline bonus method is the reporting the lowest depreciation amounts. Okay, I think it didn't get the same. Sorry about this. I copy, but this is not the same. Let me copy it again. So I had this one. Right, this is this is $40,000. You see, in the first year, 60,000 of depreciation expense is already recorded of original cost of the asset, 80,000. Okay, I mean more than how much? It is about 75% of the asset already depreciated, but in the on unit of production method only 50, about 47,000. Under the straight line methods, how much is already in the first year? This is second year also. That it means it will be sorry, $13,000 of the 13,000 of the asset, but here it is 60,000. Under the straight line, it is 13,000 in the first 2 years. Accumulated depreciation 60,000 of the 80,000 already depreciated expense. So this is good for if the company having a cash drain and problem with the generating the cash because they spent $80,000 investment to buy new machines, right? In the first year, if they fully depreciate in the first 2 years, 60,000 of this is already expensed against, right, revenue. So company will pay less taxes, okay, and save more more of the cash as paying tax. Alright, instead of paying tax. This is like an incentive for the company to recover their reinvestment. Recovering their investment of $80,000 by paying less taxes. Alright, because it means if you look at the rate, tax rate is, let's say, 0.40%. So it means that $24,000 will be tax saving, will be happening. 24,000. Okay. The rest of the question is about which method used to calculate depreciation of machine B report the highest amount of depreciation expense in year 1. Double decline balance method. Highest amount in the 4-year, it is like depreciation method, because in the it is 5,000, but in the 10,800, you see, unit of production, and the unit of production is 6,500, so it is high. In the set line is generating more depreciation expense at the end of the year. Alright, that's all about this question. I will upload such questions after I do upload this one. Okay, I will do some more. Good luck.